Hey everyone, tonight we're exploring how humanity's first bankers emerged from the quiet river valleys of ancient Mesopotamia. Before we settle in, take a moment to like this if you enjoy these deep historical explorations, and let me know in the comments where you're listening from and what time it is for you. I always find it fascinating how our global community gathers to explore these complex questions together. Now get comfortable, dim those lights. Tonight, we're not chasing dramatic events or heroic tales. Instead, we're going to examine something much quieter but equally important: the gentle birth of lending, credit, and financial trust in humanity's earliest cities. Let's begin our peaceful journey into the world of ancient banking. Picture, if you will, the soft light of dawn, breaking over the Euphrates River some 4,000 years ago. In the temple courtyards of Uruk and Babylon, scribes are already at work, their reed styluses moving methodically across clay tablets, recording the day's first transactions. A farmer approaches, seeking seed grain for the coming season. A merchant prepares for a journey to distant Anatolia, arranging credit that will sustain his family while he's away. These quiet moments, repeated countless times across centuries, slowly wove the fabric of the world's first banking systems. Tonight, we'll explore how the Sumerians, Babylonians, and their neighbors transformed simple grain storage into sophisticated networks of credit and trust. We'll discover how temple priests became the world's first bankers, how merchant families built financial empires across vast distances, and how ancient law codes tried to balance profit with justice. This is the story of humanity's first attempts to create security in an uncertain world, to build bridges of trust between strangers, and to transform the rhythms of agricultural life into the complex dance of urban commerce. As we journey through these ancient archives and abandoned marketplaces, we'll find that the fundamental questions these early bankers faced, how to measure risk, how to build trust, how to balance individual profit with social stability, remain remarkably familiar. Their solutions, carved in cuneiform and preserved in desert sands, still echo in our modern financial world. In the gentle light of dawn breaking over the ancient Euphrates, long before the world knew banks as towering institutions of glass and steel, the first whispers of organized lending began in the sacred precincts of Mesopotamian temples. Here, in these quiet courtyards, where priests moved with measured steps and scribes bent over clay tablets, humanity took its earliest tentative steps toward the complex financial systems that would eventually span continents and centuries. The temple granaries of ancient Sumer represented something far more revolutionary than simple storage facilities. These massive structures, built from sun-dried brick and carefully positioned near the heart of each city-state, served as the world's first banks, though their operators would never have recognized such a term. Within their cool, shadowed chambers, grain was not merely stored, but transformed into the foundation of an entirely new form of human relationship, one based on trust, obligation, and the promise of future repayment. The priests who administered these early financial institutions moved through their daily routines with a quiet authority that stemmed from their unique position at the intersection of the sacred and the practical. They understood, perhaps better than anyone, that the cycles of planting and harvest created natural rhythms of abundance and scarcity that could be smoothed through careful planning and systematic redistribution. When farmers arrived at the temple gates in the lean months before harvest, carrying nothing but their reputation and their promise to repay, these priestly administrators were making calculations that would echo through millennia of financial practice. The development of standardized measures represented one of humanity's earliest attempts to create fairness and predictability in economic relationships. The gentle sound of barley being poured into bronze vessels, carefully leveled and measured according to standards that had been refined over generations, created a rhythm that spoke to something fundamental in human nature, the desire for transactions to be conducted with dignity and mutual respect. These standards, painstakingly maintained and regularly verified, became the foundation upon which more complex lending relationships could be built. Consider the profound trust inherent in these early arrangements. A farmer, facing the prospect of his family's hunger, would approach the temple with nothing more tangible than his word and his standing in the community. The priest, representing not just religious authority, but the accumulated wisdom of generations of agricultural experience, would evaluate not just the immediate request, but the borrower's character, his family's history, and the likelihood of successful repayment. This was lending as a deeply human activity, rooted in personal knowledge and community relationships, rather than abstract financial calculations. The seasonal nature of these lending patterns created a rhythm that aligned perfectly with the agricultural cycles that governed all life in ancient Mesopotamia. Spring brought a surge of lending activity as farmers sought seed grain and the tools necessary for planting. Summer months saw a quieter period of waiting and tending, while autumn brought the intense activity of harvest and repayment. This cyclical pattern, repeated year after year across thousands of small communities, created a stability that allowed civilization itself to flourish in the challenging environment of the river valleys. The scribes who recorded these transactions worked with a precision that reflected their understanding of the importance of their task. Each cuneiform character pressed into wet clay represented not just a number or a name, but a human relationship, a promise made and received. The tablets they created, baked hard in kilns and stored in carefully organized archives, became the memory of the community, preserving not just the details of individual transactions, but the broader patterns of economic life that would guide future decisions. Within the temple complexes, the integration of religious and economic functions created a unique form of institutional authority. The same priests who conducted daily rituals and maintained the favor of the gods also calculated interest rates and evaluated creditworthiness. This dual role was not seen as contradictory, but as complementary. The maintenance of divine favor and the management of earthly resources were understood as aspects of the same fundamental responsibility to maintain order and prosperity in the community. The interest rates charged by these early temple banks, typically ranging from 20 to 33% annually, might seem excessive by modern standards, but they reflected the genuine risks and costs involved in agricultural lending. Crop failures, floods, and other natural disasters could destroy a season's work in a matter of days, leaving borrowers unable to repay their debts. The relatively high rates compensated for these risks while also supporting the considerable administrative apparatus required to manage the lending system effectively. As these practices evolved over centuries, they began to extend beyond the immediate needs of local farmers to encompass the growing complexity of urban life. Craftsmen sought raw materials, merchants required capital for trading ventures, and even other temples entered into lending relationships with one another. The principles established in those early grain transactions, standardized measures, careful record keeping, and the balancing of risk with reward, proved remarkably adaptable to these new circumstances. The temple archives that archaeologists have uncovered reveal the extraordinary extraordinary sophistication of these early financial systems. Thousands of tablets document not just individual loans, but complex networks of credit relationships that connected communities across vast distances. The careful organization of these records, with tablets sorted by date, borrower, and type of transaction, demonstrates a level of administrative competence that would not be out of place in a modern financial institution. The transformation from temple-based lending to merchant house operations represents one of history's most profound yet gradual economic evolutions. As we drift deeper into the ancient world of Mesopotamian finance, we encounter the remarkable story of Kanesh, a bustling trading center in central Anatolia where Assyrian merchants established what may have been the world's first truly international banking networks. Picture, if you will, the gentle morning light filtering through the narrow windows of a merchant's compound in Kanesh around 1900 BCE. The air carries the familiar sounds of a commercial center awakening. The soft shuffle of sandaled feet on stone floors, the quiet rustle of papyrus and clay tablets being arranged for the day's correspondence, and the distant murmur of traders beginning their negotiations in the marketplace beyond the compound walls. The Assyrian merchants who established themselves in Kanesh created something unprecedented in human history, a financial system that operated across vast distances, connecting the copper mines of Anatolia with the textile workshops of Assur through an intricate web of credit, trust, and carefully maintained family relationships. These were not the dramatic conquests of kings or the sudden innovations of individual genius, but rather the patient accumulation of commercial wisdom over generations of traders who understood that profit and relationship were inseparable. The merchant houses of Kanesh operated on principles that would seem familiar to any modern banker, yet they were embedded in a social fabric that made them uniquely suited to their time and place. At the heart of each operation lay the family, not merely as an economic unit, but as the fundamental source of trust that made long-distance lending possible. When Pushuken, whose extensive archive provides us with such intimate glimpses into ancient commercial life, extended credit to a local Anatolian producer, he was not simply calculating interest rates and collateral values. He was weaving another thread into a tapestry of relationships that connected his family's honor with the seasonal rhythms of agriculture and craft production across hundreds of miles. The physical reality of these lending operations reveals much about the human dimensions of ancient finance. In the quiet courtyards of merchant compounds, scribes would spend hours carefully inscribing loan agreements onto clay tablets, their styluses moving with practiced precision across the soft surface. The terms they recorded, typically 20% interest for grain loans, 30% for silver, reflected not arbitrary profit-seeking, but careful calculations based on the risks and seasonal patterns of ancient commerce. A grain loan made in the spring carried the uncertainty of harvest, the dangers of transport, and the fluctuations of market demand across the trading season. What emerges from the archives of Kanesh is a picture of lending practices that balanced commercial sophistication with profound attention to human relationships. The Assyrian merchants understood that their success depended not merely on favorable interest rates or shrewd market timing, but on their ability to maintain trust across cultural and linguistic boundaries. They learned local customs, married into Anatolian families, and participated in the religious and social life of their adopted communities while maintaining their distinct identity as representatives of Assyrian commercial houses. The lending agreements preserved in the Kanish archives reveal the intricate ways these merchants managed risk and relationship simultaneously. A typical loan might involve not just the primary borrower, but a network of guarantors, family members, and business associates who collectively ensured repayment. This distributed approach to financial responsibility created a web of mutual obligation that strengthened rather than strained social bonds. When a craftsman borrowed silver to purchase raw materials, his extended family and professional associates became stakeholders in his success, creating incentives for cooperation and support that went far beyond the formal terms of the loan. The seasonal rhythms of lending in Kanish followed patterns that connected urban finance with agricultural cycles across the ancient Near East. Spring brought requests for seed money and craft materials. Summer saw the movement of caravans carrying both goods and financial instruments. Autumn brought harvest settlements and profit calculations, and winter provided time for record-keeping, planning, and the patient cultivation of relationships that would support the next year's ventures. This cyclical nature of ancient finance created a rhythm of economic life that was both predictable and flexible, allowing merchants to plan while adapting to the uncertainties of weather, politics, and market conditions. The merchant houses of Kanish also pioneered innovations in commercial law and contract enforcement that would influence legal traditions for millennia. Their lending agreements included sophisticated provisions for dispute resolution, default management, and the transfer of obligations between parties. They developed standardized forms and procedures that could be understood and enforced across different legal systems, creating a kind of commercial lingua franca that facilitated trade and lending across cultural boundaries. As we contemplate these ancient financial innovations, we begin to understand how the patient accumulation of commercial wisdom in places like Kanesh laid the foundation for the more formal banking regulations that would emerge under rulers like Hammurabi. The merchant houses had already discovered through practical experience many of the principles that would later be codified in law: the importance of clear terms, fair interest rates, and reliable enforcement mechanisms in maintaining both commercial viability and social stability. The morning sun cast long shadows across the ziggurats of Babylon as King Hammurabi contemplated the delicate balance between commerce and justice that would define his reign. In the 18th century before the Common Era, the bustling markets of Mesopotamia had grown beyond the simple oversight of temple priests and family merchants, creating new challenges that demanded unprecedented solutions. The king's scribes worked quietly in palace chambers, their reed styluses moving methodically across clay tablets as they codified what would become humanity's first comprehensive banking regulations. The Code of Hammurabi emerged not from theoretical contemplation, but from the practical wisdom of generations of commercial experience. Merchants had long complained of inconsistent interest rates that varied wildly between cities, while farmers struggled under the burden of predatory lending that could strip them of their ancestral lands. The king's advisors, drawing from temple archives and merchant records, recognized that sustainable commerce required predictable rules that protected both lenders and borrowers while maintaining the flow of credit essential to urban civilization. The regulations they crafted reflected a sophisticated understanding of economic relationships. Interest rates were standardized at 20% annually for grain loans and 16 2/3% for silver, rates that acknowledged the different risks and seasonal patterns of agricultural and commercial lending. These were not arbitrary numbers, but carefully calculated figures that allowed lenders reasonable profit while preventing the debt spirals that had plagued earlier generations. The code recognized that grain loans, tied to harvest cycles and weather patterns, carried different risks than silver loans used for craft production or trade ventures. Perhaps most remarkably, Hammurabi's code addressed the human dimension of lending with provisions that seem startlingly modern in their sensitivity to social welfare. When natural disasters struck, debt forgiveness became not merely an act of royal mercy, but a legal obligation, recognizing that economic systems must bend before forces beyond human control. The code prohibited the use of family members as collateral for loans, understanding that the integrity of family structures was essential to social stability. These provisions reflected centuries of accumulated wisdom about the delicate relationship between economic efficiency and social cohesion. The implementation of these regulations required a sophisticated administrative apparatus that extended throughout the Babylonian Empire. Local governors received detailed instructions on enforcement, while temple courts adapted their procedures to accommodate the new legal framework. Scribes traveled between cities, ensuring consistent interpretation and application of the lending laws. The quiet authority of royal administrators gradually replaced the more personal relationships that had previously governed commercial disputes, creating the foundation for institutional rather than purely personal approaches to financial regulation. The impact of these reforms extended far beyond immediate commercial relationships. Merchants found themselves operating within a more predictable legal environment that facilitated long-distance trade and complex financial arrangements. The standardization of interest rates and lending terms created a common commercial language that transcended local customs and personal relationships. Farmers gained protection from the most exploitative lending practices while maintaining access to the credit necessary for agricultural investment and seasonal survival. The code's provisions regarding fraudulent lending revealed a sophisticated understanding of the potential for abuse in financial relationships. Penalties for misrepresentation of loan terms or manipulation of weights and measures reflected the lawmakers' recognition that trust was the foundation of all commercial activity. The careful balance between deterrence and proportionality in these penalties demonstrated the code's authors' understanding that excessive punishment could undermine the very commercial relationships they sought to protect. Women's roles in lending received particular attention in Hammurabi's regulations, reflecting the complex reality of female participation in Mesopotamian commerce. The code recognized women's rights to engage in lending activities while acknowledging the family structures within which most commercial relationships operated. These provisions created space for female entrepreneurs while maintaining the social frameworks that provided security and continuity in economic relationships. The enduring influence of Hammurabi's banking regulations can be traced through subsequent legal traditions across the ancient world. Greek commercial law incorporated many Mesopotamian principles, while Roman banking practices reflected the institutional approaches first codified in Babylon. The fundamental recognition that financial systems require both flexibility and regulation, both commercial freedom and social protection, established principles that continue to shape economic policy in the modern world. The gentle morning light filtering through the administrative quarters of Nippur reveals scribes already at work, their reed styluses moving with practiced precision across fresh clay tablets. In these quiet chambers, far from the dramatic conquests that often capture historical attention, a revolution in human economic organization was unfolding with the methodical patience of craftsmen perfecting their art. The Murashu archive, discovered in the ruins of 5th century Nippur, offers us an intimate glimpse into how agricultural finance had evolved into something approaching modern institutional lending, yet remained deeply rooted in the personal relationships that had always characterized Mesopotamian commerce. The Murashu family business represented a new scale of financial operation, one that bridged the gap between traditional family-based lending and the institutional banking that would later emerge in Hellenistic and Roman times. Unlike the temple-based lending of earlier periods or the merchant networks of Kanesh, the Murashu firm operated as what we might recognize today as an agricultural bank, managing vast estates while simultaneously providing credit, collecting taxes, and coordinating the complex logistics of irrigation-dependent farming across the Babylonian countryside. The archive itself, comprising over 700 cuneiform tablets, reads like a meditation on the intersection of land, labor, and capital in an agricultural society. Each tablet represents not merely a transaction, but a relationship between the firm and individual farmers, between Persian imperial administrators and local agricultural expertise, between the rhythms of the natural world and the demands of an increasingly complex economy. The scribes who created these records worked with the same deliberate care as their predecessors, understanding that each mark in the clay carried the weight of human livelihood and social stability. What emerges from these records is a picture of agricultural finance that was both remarkably sophisticated and deeply personal. The Murashu firm did not simply lend money, it managed entire agricultural systems, coordinating the seasonal needs of hundreds of farmers with the administrative requirements of Persian imperial taxation. A typical transaction might involve the firm advancing seed grain to a farmer in the spring, providing additional credit for irrigation maintenance during the growing season, and then collecting both principal and interest at harvest time, while simultaneously ensuring that imperial taxes were paid and that sufficient grain remained for the farmer's family survival through the winter. The complexity of these arrangements required a new kind of financial professional, one who understood not only the mechanics of lending and interest calculation, but also the intricacies of agricultural production, the demands of imperial administration, and the delicate social relationships that held rural communities together. The Murashu family members who ran the firm were neither temple priests nor traveling merchants, but something new: professional agricultural financiers who combined the authority of institutional lending with the personal touch that remained essential to Mesopotamian business culture. The seasonal rhythms that governed all agricultural societies found their expression in the Murashu lending patterns, with a poetry that speaks to the deep connection between human economic activity and natural cycles. Spring brought a flurry of activity as farmers sought credit for seeds, tools, and labor. Summer required additional advances for irrigation maintenance and harvest preparation. Autumn marked the crucial period of settlement, when the year's agricultural production was measured against accumulated debts and obligations. Winter offered a time of relative quiet, when the firm's scribes could organize their records and plan for the coming year's operations. These patterns created a natural rhythm of expansion and contraction in the firm's lending activities, one that required careful management of liquidity and risk. The Murashu archive reveals sophisticated strategies for managing these seasonal fluctuations, including the maintenance of grain reserves, the coordination of lending with multiple farmers to spread risk across different fields and crops, and the development of relationships with other financial institutions that could provide additional capital during peak demand periods. The human dimension of these operations emerges clearly from the individual records preserved in the archive. We can trace the relationship between the firm and particular farming families across multiple generations, seeing how financial arrangements evolved as families prospered or struggled, as young farmers inherited their parents' debts along with their fields, and as the firm adapted its lending practices to changing agricultural conditions and imperial policies. These were not anonymous transactions, but ongoing relationships that required constant attention to the human elements of trust, reputation, and mutual obligation that remained central to Mesopotamian economic life. The integration of imperial taxation with private lending created new opportunities and challenges that required innovative solutions. The Murashu firm often served as tax farmers, collecting imperial revenues while simultaneously providing the credit that enabled farmers to meet their tax obligations. This dual role required delicate balancing. The firm had to maintain its relationships with local farmers while satisfying the demands of Persian administrators, all while ensuring its own profitability and long-term sustainability. The moral dimensions of lending in ancient Mesopotamia emerged not from abstract philosophical treatises, but from the daily rhythms of agricultural life and the practical wisdom of rulers who understood that excessive debt could unravel the social fabric itself. In the gentle morning light, filtering through temple courtyards, priests would often begin their day not with prayers alone, but with careful consideration of the lending records that determined whether families would eat or go hungry, whether craftsmen could continue their work, or whether entire communities might face displacement. The earliest Sumerian city-states developed a profound understanding that interest, while necessary for the functioning of their increasingly complex economies, carried within it the seeds of social disruption. Temple archives from Lagash and Umma reveal a sophisticated awareness of what we might today call the social costs of financial capitalism. The priests who administered these early lending systems were not merely religious functionaries, but social engineers, carefully balancing the need for agricultural investment against the danger of creating a permanent debtor class. Religious authorities approached lending with what can only be described as a contemplative wisdom. The Code of Hammurabi, carved in stone around 1750 BCE, reflects not harsh commercial pragmatism, but a deeply considered philosophy of economic justice. The famous law stating that if a man cannot pay his debt, he may give his wife, son, or daughter into service for 3 years, but in the 4th year they must be freed, reveals an understanding that debt bondage, while sometimes necessary, must have limits. The stone tablets record not just legal provisions, but a meditation on the proper relationship between creditor and debtor, between economic necessity and human dignity. The concept of mesharim, often translated as justice or equity, permeated Mesopotamian thinking about lending. This was not abstract justice, but practical wisdom, born from centuries of observing how excessive debt could destroy the agricultural foundation upon which their civilization depended. Royal edicts proclaiming debt forgiveness were not arbitrary acts of royal generosity, but carefully timed interventions designed to prevent economic collapse. The rhythm of these proclamations, often coinciding with the accession of new rulers or times of natural disaster, created a predictable cycle that allowed both borrowers and lenders to plan their activities within known parameters. In the quiet chambers where scribes recorded these royal proclamations, we can imagine the sense of relief that must have accompanied the careful inscription of debt cancellation orders. The Sumerian ruler Enmetena's edict freeing citizens from debt bondage was recorded with the same meticulous care as any commercial transaction, but the language carries an almost poetic quality, describing the restoration of families to their land as a return to natural order. These moments of debt forgiveness were not seen as economic disruption, but as essential maintenance of social equilibrium, like the seasonal flooding of rivers that renewed the fertility of the land. The philosophical dimensions of lending were explored not only in royal courts, but in the wisdom literature that emerged from temple schools. Akkadian texts speak of the proper relationship between wealth and poverty, describing the wealthy lender as having responsibilities not just to profit, but to maintain the social bonds that held communities together. The image of the wise creditor appears repeatedly in these texts, portrayed not as a harsh taskmaster, but as a careful steward of community resources, someone who understood that excessive interest could destroy the very relationships that made lending possible. The seasonal rhythms of debt forgiveness created a unique temporal dimension to Mesopotamian economic life. Farmers knew that the approach of certain festivals or royal anniversaries might bring relief from crushing debt burdens. This knowledge shaped not only individual financial decisions, but the entire agricultural calendar as communities planned their planting and harvesting with an awareness that debt obligations might be periodically reset. The psychological impact of this system cannot be overstated. It provided hope in times of desperation and created a sense that economic relationships, however difficult, were embedded within a larger framework of social justice. Women played crucial roles in maintaining the ethical dimensions of lending, particularly within family networks where commercial relationships intersected with kinship obligations. The archives from Sippar reveal numerous cases where women intervened in lending disputes, often serving as mediators between male relatives whose business relationships had become strained. Their approach to these conflicts reveals a different perspective on economic relationships, one that prioritized the maintenance of family harmony over strict commercial advantage. The quiet authority of women in these situations suggests that the ethical dimensions of lending were understood not just as matters of law or royal policy, but as essential elements of domestic and community life. The integration of religious festivals with debt forgiveness created powerful communal experiences that reinforced the moral dimensions of economic relationships. The New Year festivals in Babylon included ceremonies where debts were formally cancelled, transforming what could have been purely administrative procedures into moments of collective renewal. The sound of temple bells marking these occasions would have carried across the city, announcing not just religious observance, but economic liberation for thousands of families. These ceremonies created shared memories that bound communities together and reinforced the understanding that economic relationships must serve human flourishing rather than merely individual profit. The gentle rustle of linen garments and the soft murmur of negotiations filled the temple courtyards of ancient Sippar, where women like Lamasa Satum conducted their lending operations with the same careful attention to detail that characterized their male counterparts. In the world of Mesopotamian finance, the boundaries between domestic and commercial spheres blurred in ways that reveal the deeply familial nature of early banking systems. The economic networks that sustained these ancient civilizations were not merely institutional constructs, but living webs of kinship, marriage, and household relationships that provided the essential foundation of trust upon which all lending ultimately rested. The legal tablets from various periods of Mesopotamian history paint a picture of women's economic roles that evolved gradually across the millennia, shaped by changing political circumstances and social customs. During the Old Babylonian period, women could own property, engage in commercial transactions, and even operate independent lending businesses, though always within the broader framework of family structures that defined social organization. The famous businesswoman Lamassatum, whose activities are documented in numerous cuneiform tablets from Sippar, managed complex lending operations that included both grain loans to farmers and silver loans to merchants, demonstrating the sophisticated understanding of different market segments that characterized successful ancient bankers. These female entrepreneurs navigated a world where legal rights and social expectations created both opportunities and constraints. Temple women, particularly those associated with the cult of Shamash, the god of justice, often found themselves in positions of economic authority that reflected their religious roles. Their lending activities were seen as extensions of the temple's responsibility for maintaining social order and providing for the community's needs during times of scarcity. The careful records they maintained reveal lending practices that balanced commercial considerations with social obligations, offering lower interest rates to widows and orphans while maintaining standard rates for established merchants. The family structures that supported these financial networks were complex arrangements that extended far beyond the nuclear household. Marriage contracts from this period often included detailed provisions for business partnerships, with wives bringing not only dowries but also commercial connections and lending relationships that could be integrated into their new family's economic activities. The negotiation of these arrangements required careful consideration of existing business relationships, outstanding loans, and the potential for future commercial cooperation between different family networks. The peaceful rhythm of household life in these ancient cities was punctuated by the regular business of lending and borrowing that connected families across social and economic boundaries. In the courtyards of substantial homes, women would receive clients seeking loans, carefully weighing silver on standardized scales, while scribes recorded the terms of agreements on clay tablets. The atmosphere of these transactions was one of measured deliberation, with multiple family members often consulted before significant lending decisions were made. This collaborative approach to financial decision-making reflected the understanding that lending relationships affected not just individual borrowers and lenders, but entire family networks whose reputations and future prospects were at stake. The inheritance patterns that governed the transfer of lending businesses from one generation to the next reveal the sophisticated understanding of commercial continuity that characterized these ancient financial systems. Sons and daughters alike could inherit shares in family lending operations, though the specific terms of their participation were often carefully negotiated to maintain family harmony and business effectiveness. The gradual transfer of business knowledge from parents to children was a process that began in early childhood, with young family members observing negotiations, learning to read cuneiform records, and gradually taking on responsibilities for smaller transactions. The marriage alliances that linked different merchant families created networks of mutual support and shared risk that extended across vast distances. When Assyrian merchants established trading posts in Anatolia, they relied heavily on these family connections to provide the trust and reliability necessary for long-distance lending. Wives and daughters often served as crucial links in these networks, maintaining correspondence with distant relatives and managing local aspects of far-flung business operations. The letters exchanged between family members reveal a world where commercial information, personal news, and expressions of affection were seamlessly interwoven, reflecting the integrated nature of family and business relationships. The seasonal rhythms of agricultural life created particular opportunities and challenges for women involved in lending operations. During harvest seasons, when farmers were repaying grain loans, women often took leading roles in the complex process of evaluating crop quality, negotiating repayment terms, and managing the storage of grain received as payment. Their expertise in household management translated naturally to the larger-scale operations of commercial lending, where the same skills of careful measurement, quality assessment, and long-term planning were essential for success. The religious dimensions of women's participation in lending activities added layers of meaning to their commercial roles. Female temple officials who managed institutional lending operations were seen as servants of divine justice, responsible for ensuring that lending practices upheld the moral order that the gods demanded. Their decisions about interest rates, repayment terms, and debt forgiveness were understood to have spiritual as well as economic implications, connecting the practical business of lending to the broader cosmic order that governed human affairs. The quiet authority exercised by women in these financial networks reflects the sophisticated understanding of economic relationships that characterized Mesopotamian society. Their success in managing complex lending operations demonstrates that the skills required for effective banking, careful record keeping, risk assessment, relationship management, and long-term planning were not exclusively masculine domains, but rather human capabilities that could be developed and exercised regardless of gender within the appropriate social and legal frameworks. The gentle clicking of cylinder seals against wet clay echoes through the millennia, carrying with it the profound story of how human beings learn to trust across vast distances and uncertain futures. In the quiet chambers of Mesopotamian archives, where scribes worked by the steady light of oil lamps, we witness the birth of technologies that would fundamentally transform the nature of economic relationships. These innovations, born from the practical needs of merchants and farmers, created the infrastructure upon which all subsequent financial systems would rest. The development of cuneiform writing itself emerged from the necessity of recording increasingly complex transactions. What began as simple pictographs pressed into clay tokens gradually evolved into sophisticated accounting systems capable of tracking multi-year loans, compound interest calculations, and intricate partnership agreements. The scribes who perfected these techniques worked with methodical precision, understanding that their careful documentation formed the foundation of trust between strangers. Each wedge-shaped mark carved into clay represented not merely information, but a promise, a commitment that could be verified, disputed, and enforced across generations. The standardization of weights and measures across Mesopotamian city-states reveals the profound human desire for fairness and predictability in economic exchange. The barley measure, the silver shekel, the talent of wool, these standards emerged through countless negotiations between merchants, temple officials, and royal administrators. In the bustling marketplaces of Babylon and Ur, traders would carefully examine bronze weights, testing their authenticity against known standards, understanding that commerce itself depended upon this shared language of measurement. The gentle authority of market inspectors, moving through the crowds with their official standards, maintained the delicate balance between individual profit and collective trust. Cylinder seals, those miniature masterpieces of ancient art, served as the world's first secure authentication system. Each seal was unique, carved with intricate designs that could not be easily replicated, serving as both signature and guarantee. The process of authentication carried its own ritual significance. The careful preparation of clay, the precise rolling motion, the satisfaction of seeing one's mark clearly impressed. Merchants would carry their seals as precious possessions, understanding that their commercial reputation was literally carved in stone. The archaeological record reveals thousands of these seals, each one representing an individual's place in the vast network of Mesopotamian commerce. The evolution of commercial correspondence networks demonstrates how information itself became a form of currency. Letters between Assyrian merchants in Kanesh and their families in Assur traveled along the same routes as caravans, carrying news of market conditions, political developments, and family affairs. These letters, written on clay tablets and carefully sealed, created an information network that spanned continents. The patient scribes who composed these messages understood that timely information could mean the difference between profit and loss, between successful ventures and commercial disaster. The technological innovations of record-keeping extended beyond mere documentation to encompass sophisticated systems of verification and cross-referencing. Temple archives developed elaborate filing systems, organizing tablets by date, transaction type, and parties involved. The quiet satisfaction of archivists methodically organizing these records reflected an understanding that institutional memory was crucial for maintaining trust over time. When disputes arose, these carefully maintained records provided the evidence necessary for resolution, creating a system of commercial law based on documented precedent rather than mere assertion. The relationship between technological innovation and economic growth becomes particularly evident in the development of mathematical techniques for calculating interest and managing complex financial arrangements. Mesopotamian mathematicians developed sophisticated methods for compound interest calculations, creating tables that could be consulted for various loan terms and rates. These mathematical innovations, preserved on countless tablets, reveal a society grappling with the practical challenges of time, risk, and return on investment. The authentication systems developed by Mesopotamian merchants created networks of trust that extended far beyond individual relationships. When an Assyrian merchant in Anatolia received a sealed tablet from a colleague in Assur, the authentication process involved not just verifying the seal, but understanding the broader context of ongoing relationships, market conditions, and political developments. This technological infrastructure of trust enabled commerce to flourish across vast distances, creating the foundation for the first truly international economy. The gradual refinement of these technologies reflects the accumulated wisdom of countless individuals, scribes perfecting their craft, merchants developing more efficient procedures, administrators creating more effective systems of organization. Each innovation built upon previous achievements, creating a technological heritage that would influence financial practices for millennia to come. The quiet persistence of these human efforts, generation after generation, demonstrates the profound importance of institutional continuity in economic development. These ancient innovations in record-keeping and authentication created the technological foundation for all subsequent financial systems, their influence extending through Greek and Roman banking practices into the modern world. The fundamental challenges they addressed, establishing trust, maintaining accurate records, standardizing measurements, authenticating transactions, remain central to financial systems today, reminding us that beneath the complexity of modern banking lies the accumulated wisdom of countless generations of human innovation and cooperation. As we reach the gentle conclusion of our contemplative journey through the ancient lending practices of Mesopotamia, we find ourselves surrounded by the profound wisdom of civilizations that understood the delicate balance between human need and institutional order. The soft whisper of cuneiform styluses against clay tablets seems to echo across 4 millennia, carrying with it the patient voices of scribes who documented humanity's first experiments with organized trust and financial cooperation. These ancient banking prototypes, emerging slowly from temple granaries and merchant houses, reveal the timeless human search for security and predictability in an uncertain world. The Sumerian priests, who carefully measured grain in temple courtyards, the Assyrian merchants, who built networks of trust across vast distances, and the Babylonian administrators, who crafted the world's first banking regulations, all participated in a quiet revolution that would shape human economic relationships for thousands of years to come. The gentle rhythms of agricultural lending, tied to the seasonal cycles of planting and harvest, created a natural pace that honored both human need and natural limitation. Interest rates that reflected the productivity of the land, debt forgiveness that acknowledged the vulnerability of farmers to flood and drought, and family networks that extended trust across generations all speak to a profound understanding of economics as fundamentally human endeavor. As we reflect on the women who managed temple lending operations, the families who built commercial dynasties through patient relationship building, and the legal scholars who crafted frameworks for fair dealing, we see the emergence of institutions that recognized both the necessity of profit and the importance of social stability. These ancient practitioners understood that true financial success required not just clever calculation, but genuine care for the community's well-being. The archaeological tablets that preserve these ancient records seem to glow softly in our imagination, their cuneiform characters forming patterns of remarkable sophistication and human wisdom. The careful documentation of loans and repayments, the standardization of weights and measures, and the development of authentication methods all represent humanity's growing capacity to create systems of mutual benefit and shared prosperity. The legacy of these early banking prototypes flows like a gentle river through subsequent civilizations, carrying forward the essential insight that financial institutions must serve human flourishing rather than merely accumulate wealth. The Greeks and Romans, medieval Islamic scholars, and modern economists all drew from this ancient wellspring of wisdom about the proper relationship between individual gain and collective good. As we settle into peaceful contemplation of this remarkable heritage, we can feel the presence of countless generations who participated in this slow, patient development of financial trust. Their voices seem to whisper across time, reminding us that behind every economic transaction lies a human story of hope, need, and the desire for security and dignity. The gentle evening light that falls across ancient Mesopotamian ruins today illuminates the same fundamental human needs that drove the development of these early banking systems. The search for predictability, the desire to provide for family and community, and the hope for a more secure future continue to motivate economic relationships in our own time. Let yourself rest now in the peaceful knowledge that you are part of this ancient continuum of human cooperation and mutual care. Feel the gentle weight of history supporting you, like the accumulated wisdom of thousands of years of patient problem solving and gradual institutional development. Allow the soft voices of ancient scribes and merchants to lull you into restful sleep, their careful record keeping creating a rhythm as soothing as gentle rain on temple rooftops. Rest peacefully, knowing that the fundamental human capacity for trust and cooperation that created these ancient banking systems continues to flow through our world today, connecting us all in an endless network of mutual support and shared prosperity. Sleep well, cradled by the wisdom of ages.